Hey folks, as we do here on Fridays, I am overly excited. This is an exuberated time for me. I know I'm going to be rubbing some salt in some wounds, but this is where I get to pick up my favorite discounted deals and companies that actually have bottom line earnings that I know are going to ride through this no problem. I want to talk about some of those because I have got my gunpowder, my cash ready and locked and loaded. I kind of wish I dabbled in a little bit this morning because damn, we hit some pretty crazy lows on some of my favorite companies, but maybe we'll wait till next week and we'll talk about that when we get in the portfolio. But first, I got to rub some salt in the wounds again because I was making fun of GameStop and AMC on Twitter or on TikTok, and I got reamed 9 ways to hell by the diamond handers that are getting crushed by the paper handers that are clearly outweighing them currently. And I mean, look at GameStop's to $96. I mean, this risk-off environment has absolutely destroyed so many of these small caps to the point where a lot of them actually have good numbers. Some of them have actual EPS numbers, and they're trading at like their NAV prices, like their underlying asset value prices, or below it, which is kind of hilarious to me. But that doesn't give me the guts yet to buy into some of these, like, you know, we talked about this with Alibaba, a lot of the small caps. You want to make a list and wait till we know we're getting to the other side of this, because man, this could continue to last for months. A lot of these companies are becoming penny stocks again, right? I mean, look at Robinhood. God, this thing just dropped even more today, down 83%, like just painful as hell. And honestly, I want to show you something really intriguing because I know I show the broader markets, and so many of us are looking at things like the S&P 500 trading down around 9.5% from the highs. It's actually rebounded slightly from the lows. The NASDAQ down 16.4%. We aren't exactly in full bear market territory yet until the NASDAQ's trading below 20%. S&P starts hitting those 15% lows. The Dow actually doing better than all of them, still only down 7.4%. But because we fixate so heavily on the US markets, we forget that there's actual global stability out there. And where else other than the Great White North? Your favorite Canadians, eh? I mean, take a look at the TSX. It's actually only down 5.88% because I'm like, every time I look at my Canadian stocks, I mean, those banks are going up. A lot of the telecoms have been really stable here. The only thing kind of getting hit in my portfolio are the utilities. And I'm just like, hey, damn, man, Canada is holding up. I mean, look at the 1-year return, 16% on the TSX. I mean, the Dow's 11% up. The NASDAQ's barely flat. And then the S&P is actually, let's take a look at the 1 year here, is up 14%. So it's really intriguing to see that, yes, the Canadian markets are outpacing the US markets for once. That's a rarity. But taking a look, guys, after earnings yesterday, I am shocked to see that Apple has been holding up so well, not offering revenue guidance. So it's putting a little bit of fear into people if we're going to start seeing some, slowing down in sales of iPhones and things of that nature. But honestly, guys, if Apple starts going down, I'm telling you, we'll be in a real bear market here soon. But yeah, after some major bottoms today with Tesla hitting back into the 700s and a lot of these larger cap companies, guys, pulling back to only rebound in this kangaroo market that continues. So this is why I'm kind of hesitant on like really just throwing all my cash in the market, because I feel like every time we rebound, by the end of the close, we're usually back down hitting new bottoms the next day. That's what I'm hoping continues. But a lot of people on CNBC are calling this kind of the bottom of this market. And you don't call bottoms or tops because you don't know. There's never a top to the S&P. If it over 20 years, it's always hit new highs. So you can't call tops, and you don't know how low things go, right? But what I do know is that this is a risk-off environment. So if you are a risk-on investor, this is not the market for you. It was real funny because Jim Cramer yesterday was going off about basically he's no longer offering insights or telling people to buy companies that don't show positive EBITDA because you're going to lose money, and he wants viewers. So he's only going to tell you where to go where there's money, and that's in EPS, baby. And that brings me into my portfolio so we can talk about what I'm buying and how I generally feel about it, because I actually got through some of my tax implications for my corporate account, my personal taxes, and my personal taxes are null. Like I literally hardly owe anything because all the money's in the corporate, and I kind of got to generalize the idea, but my corporate year end doesn't end till May, so I still have to be a little careful with some of the spending. But putting some tax stipulations aside, I think I have about 10 to 12,000 in cash. I'd be comfortable investing quite a little bit of this in this market. And many of you know that I already bought Tesla. I did end up picking up more Tesla shares in the 900 range because I wasn't sure what was going on. But honestly, guys, this is a dream come true, because what happens here is every time I look at my accounts individually, I kind of get really scatterbrained. I'm like, should I be doing something different in this account versus that account? And when I kind of come into this spreadsheet, it reminds me of my portfolio as a whole, and it makes me a little bit more comfortable, gets rid of some of the anxiety, and allows me to say, hey, where can I continue to buy into? Because obviously when tech was getting into those 9-10% weightings with Facebook and Tesla, I can't be buying them there. And once we get over 10%, I have to question on whether I should sell them. But when my favorite companies like Tesla are dropping back down into the 700s here, my weighting has dropped off so drastically. And the fact that I know, guys, that that company is going to be posting 50% rev growth for the foreseeable next few years at least, it's just like, it's an inevitability that there's never going to be a bad earnings. So that's great. And then on top of that, whether self-driving, whether the robotics, whether the power walls or the batteries start coming into the bigger light picture where it kind of starts driving a lot more interest, the stock's just going to go back up. So I feel like, Tesla's my ETF for growth, and I love buying it, especially when it's down here. So I do got some money that I will be shoveling into Tesla stock again. I'm not as intrigued to buy Facebook. In fact, I wish I didn't buy Facebook in my tax-free savings account. I might reposition that because I'm down like 10% on it. It's really not a big deal. It's a couple $100. I might reposition that into the S&P 500 because, as I told you guys, usually in these volatile moments, you kind of want to offer some stability to the portfolio, and you really get that out of index funds. Gives me some more dividends, a little bit more cash flow, and that's kind of what I've been focusing on the dividend side, because like I said, guys, this is where when I start seeing my favorite dividend stocks pull back, that I can really start amplifying my cash flow and kind of getting that back up. So I'm always looking toward the dividend side. I've really kind of averaged into a lot of the banks, and that's what's been offering a lot of stability from the Canadian side of the border, because I only hold Canadian banks, which now make up 5, 10, 15, 17% of the overall portfolio. And that's where I'm going to be really fixated this year, because, in an interest raising environment, commodities do well, financials do well, typically consumer staples do well. But the problem with consumer staples is they're insanely overvalued. I mean, I was looking at Pepsi the other day in my RSP, and I've been debating on selling off half Pepsi, half of my, well, maybe not half, maybe like 30% Pepsi, 30% Johnson & Johnson, and then adding another really solid foundational dividend stock and one of those huge name brands, whether we're talking things like Procter & Gamble or McDonald's. But the problem that I have with those companies is they're just so bloody expensive. They trade at tech stock valuations for companies that don't actually grow a whole lot. But again, I'm just trying to think to myself, am I looking for dividends? Then maybe I should just look at maybe a dividend ETF or buy into the global market index fund like VTI. I'm just always a little actually more hesitant. It's really odd, actually. I'm in a weird moment in my life in the market where I'm looking at actually rebuying into some tech, and I'm actually more worried about my consumer discretionaries, because the only value I really see is in banks, some of those healthcare sectors like Pfizer that's been pulling back. But it's such a tough thing when you're looking at valuations, because value plays aren't really those good of value plays like they used to be, right? So this is kind of where I currently sit, guys. I'm still just taking a look at the broader view here. Bitcoin, a lot of the cryptocurrency markets I'm still really bullish on, but I'm not buying in at these current prices, though these are probably good prices to continue to average in. And if I can make one note on Bitcoin, I keep hearing the same discussion everywhere. CNBC or chat groups everywhere. Everyone's like, it's supposed to be an inflation hedge. It's supposed to be a hedge. It's a hedge against this, that, and the other. It's like, look, the reason that Bitcoin is a hedge, it's not a hedge because it's like gold. It's not a hedge for like or an inflation hedge. It's not all this shit that we keep hearing about, because it's going to sell off when the rest of the market sells off. What makes Bitcoin a hedge is it's a different asset class. So you're not going to be exposed if the real estate market has a complete tanking. Now, could the rest of the market sell off, take Bitcoin with it? Yes. The point of owning different asset classes, because they offer you different forms of protection separated from the exposure of all of those, right? So, I mean, I wish people would look at it that way rather than just keep comparing it as a hedge against this, that, the other. It's like it's just its own asset class. And for that reason, it's a hedge against other asset classes. It offers you protection against what happens in those asset classes. That's why Bitcoin is a hedge. I wouldn't say it's a hedge against inflation. I wouldn't say it's a hedge against gold or anything like that. It's not. It's just its own little thing, and I love it for that reason. So whether I buy more, not as inclined, because I'd rather get the incredible EPS growth that's going to be coming out of Tesla, knowing that inevitably the stock could bottom. I mean, the bubble's bursting here in the EV market. I've been calling this forever. Tesla could go down to 300. We talked about this in the live stream yesterday. The only thing that I care about is the fundamental business. And like I said, guys, I try and buy the best balance sheet, the best growing companies possible, and that is Tesla. So you guys got to pick your price point, start getting into it. I'm a little bit more bullish. I don't mind paying a premium here because I'm looking 10 years out from now. And it always brings me back when these stocks sell off. I don't get skittish like a lot of small cap guys are right now. I get bullish as all hell when stocks kind of come down to a range where I can buy into it without overexposing the portfolio. So I want to know what you think. What are you guys buying? How are you cost averaging into this market continually? I'd love to hear about it. And coming into the next week, as always, consider subscribing because I'll update you when I do those buys. But stay cool, stay awesome, and I look forward to catching you in the next one.